What up, investors? It is August 25th, 2022, and today I want to talk about why, in my opinion, it's important not to marry a specific investment style, which is kind of controversial. I wanted to just do a review of the accounts and talk a lot about Apple because their earnings coming out. Their announcement is coming out for their new products. Like they're going to announce maybe 20 new products and their line. So I want to talk about that, but I want to make the episode a little more philosophical, and that's just the kind of topics that interest me more than the day-to-day kind of news that are going on. So first, as always, I'm going to do an account update before I talk about that, and I will show you all of my positions in depth. I'm going to show you the performance of the account really quickly. I'll show you the investment tab and my margin situation and what's going on there. And then once you see my face like this full screen, then I will be talking about the topic of today. So without further ado, let's get into the account. I'm sitting at $210,964, almost $211. My all-time high is like, I don't know, was it 214? So pretty close to all-time high. The week honestly started pretty crappy, but then it rounded the bottom here, and now it's back up where it started. I'm sitting basically flat on the week. I'm really curious how the S&P 500 did on the week, so I'm going to compare myself to the SPY, which is kind of a proxy of the S&P 500, and that's sitting at negative 1.42%. So I'm beating the market in the week. I'm very happy about that. Also beating in other metrics. I'm not going to go over it today in the interest of time. So here are my option positions. I'm going to scroll through them quickly. So if you're really interested in the position, all the information is contained in this little box. A lot of things went well today for me. That's why I was up over 2.5%. I did many interesting things, if you notice here, which is I sold a lot of calls on many of my positions, including my leaps. So I'm trying to lock in some of those gains and stop suffering from theta decay. We'll see if that pays off or whether it's going to be a very fatal mistake. I did that for the Chinese stocks as well. So we'll see. PayPal has it, and even Apple. I've sold a lot of calls against my Apple position as well. I'm trying to perhaps exit a little bit of that and raise some cash and reduce my margin even further. Now, these are my equity positions. Apple was up 1.6%. Realty income up 0.4%. Main Street Capital sitting flat. Paramount at plus 3.56%. I'm really glad that the stock is going up. Smith & Wesson was up 0.5%, sitting pretty flat. I'm okay with it sitting flat for the next month. I have a lot of contracts that are expiring in less than a month. I want, if there's no movement in the account here, I'll still be winning, which is great. Here's the investment tab. You can see here that I'm sitting at an all-time percentage margin low since the beginning of the year. I'm sitting at 10.08%. That makes it a 20.16% levered up. That's how it works. Now, here are the equity positions marked by equity. So you can see that Apple is by far my largest position right now. Almost $121,000 invested in Apple at the moment. I am a little nervous about that. I'll touch on it in a second. Main Street Capital 37,000, Paramount Global 31,000, Realty Income 26,000, and Smith & Wesson sitting at 16.9, almost 17,000. Now, a lot of these positions are set to exit, and if I get out of my trading position, which is Paramount and Smith & Wesson, I'll really be left with only 3 major stocks. I like to keep it around 5 or 6. So I'm going to have to find some new champions. Goldman Sachs was one of them, but unfortunately Goldman Sachs shot up too fast for me to handle, and so I exited out of this position. In retrospect, actually I did a good exit. I probably exited around a $350 level, and it's sitting at $346 right now. I don't know what the future holds, but I guess I traded it, even though I thought it would be a core position for me. So I may re-enter. This little run here may be done in the short term. If it retraces back to maybe 300, 305, 310, I think I'll be getting back into Goldman Sachs. But until then, I'm staying out. And if it shoots up and never returns, probably going to stay out. I have plenty of other things that I can invest my money in. So that is the account, ladies and gentlemen. Any questions in the account, shoot me a message, comment below, and I'll do my best to answer it. Now, I've been listening about all kinds of fun things. I listened to this one podcast. I highly recommend it. Look, it's really fun for me to listen to. It's called the Acquirers Podcast. And there's 3 guys that talk about a bunch of cool things, and it's kind of conversational, and I like that. I really like conversational style. I don't like over-edited, over-hyped type of productions. But I was listening to talk, and also listened to other podcasts as well, and this issue comes up over and over again, which is the issue of strategy. How do I call aging, or strategy timing, or I'll just try to describe it, right? So what basically the topic is that, let's say you're a value investor, and that only works for 10 years, every 30 years or something like that. So you kind of just wait for your moment for all these years and reap the rewards. And then in the rest of the time, you're just kind of hanging tight and being tough. And then same thing for growth. Sometimes growth outperforms for spurts of time and things reverse. And then, maybe you're a short-term trader of some kind, and that only works for a while, and then you end up losing a bunch of money, etc. Or maybe you're a swing trader, momentum trader, whatever you want to call it. And then that works for some time, and then you lose the money. Maybe you're just a long-term, never sell, hold investor, but that only works in the U.S., and who knows for how long. So my idea was that, and I've talked about this before quite a bit actually, is style, not just, equity diversification, but being flexible on the type of investor you are. Many people will listen to that and be like, what the hell, that's so weak sauce, right? Nobody wants to be that guy or girl where they buy something and then they're trying to momentum trade it, and all of a sudden it goes along against their expectation, and now all of a sudden they turn into a long-term holder, right? Or you've been day trading, and then all of a sudden you're becoming a momentum trader, or vice versa, right? You're a momentum trader, and then you sold real quick that same day, and you become a day trader now, right? So everybody poo-poos on that. They think it's weak sauce, but I actually think it is not. I go against the grain on that opinion, and I think that being flexible in your style can actually earn you dividends. No pun partially intended, as I was speaking. I thought of it. Because you could be a dividend investor as well, right? You could be you could be playing dividend stocks. You could be momentum swinging, trading dividend stocks, and then turn into a dividend holder and try not to pay attention to the top price and just pay attention to the dividends that are being paid out, right? That's kind of like the pride and joy of a dividend investor, is to not pay attention to the actual spot price, but only on the amount of dividend increase that's happening each year, and the fundamentals of the company / fund. So I actually think that it's a strength, and in fact I think it's necessary if you're going to go and try to outperform the market year to year, because every strategy, like what I just mentioned, has its day under the sun. Momentum strategy works for a while. Look at Cathie Wood, right? She's basically a momentum trader, and her fund worked really well when it was a growthy environment, and then for the last couple of years she's been getting crushed under the trampled on by the millions of value investors that are coming on the market and requesting redemption for all the poorly performing years they've had prior. So what if you are flexible, all right? What if you're not married to a specific investing style? What if you're not a dividend investor? What if you're not a momentum trader? You're not a day trader, right? You are not a swing trader. You are not a never sell. You're not a value investor. You're not a growth investor, okay? I guess the type of investor is called a generalist, where they just kind of pick up on what works. But even a generalist, I want to go even beyond that. Like, even a generalist can be wrong, right? Generalists can become specialists in certain times of need. For example, let's say that we have a decade ahead of only foreign stocks performing well and the US doesn't. I know it's very unlikely. Okay. But it could happen that, international equities do really well and the US is just flat for the next 10 years. Well, wouldn't you want to become a little bit of an expert in international equities? How are you going to beat the benchmarks if you don't know that world? No pun intended again. Okay. Or for example, oil's been really hot in the last year or two or whatever. Don't you want to know a little bit of a thing or two about what's driving the markets higher? Like, that's the new alpha, right? When at least for what the market's concerned with. So the definition of alpha basically is not that. It is when, from the market's perspective, but if you guys are wondering what alpha means, it's whatever is giving you the ability to outperform the S&P 500 basically, or whatever benchmark that you set for yourself. It can be 0, or it can be, bond returns, whatever, 3% a year or whatever it is. Or it can be the S&P 500 or the NASDAQ even. So you could say that I've been generating alpha for 3 out of the 4 years that I've had this account public, right? Because I've beat the market 3 out of the 4 years. Only lost by a little bit last year, maybe by like 4 or 5%. But I was still up like 18% on the year, where others were up a lot more, but that's fine. But I'm also beating the market this year, and not many people are. So you could argue that I've been generating alpha, right? But you can generate alpha by being a day trader. You could just be, as long as you're outperforming the S&P 500 on a yearly basis, then you're generating alpha, right? So that's what alpha basically means. Just, to get that out of the way. So what I was saying is, like, you got to do everything you can to generate alpha, even if it means that you have to switch styles. Like, if your style is not generating alpha, you are doing yourself, I think, a disservice by being married to it. Like, no matter how good of a value investor you are, right, chances are that the value, the stock that you pick, will not outperform the S&P 500. It's going to be even that much harder for you to dig deep into these financials or whatever when you have skyrocketing mega cap growth stocks like completely hogging the performance of the S&P 500. All right, so even if you have the creme de la creme, the cream of the top of the cream, whatever the saying is, you still struggle versus the index, and you won't be able to generate alpha even if you're a world-class, number one in the world value investor. So I value, no pun intended again, I value the ability of an investor to be fluid when it comes to investment style and not identify as any one of those things. Now, you can do that, and it's important to invest based on your personality. I recognize that. But it doesn't mean that your personality has to be tied by a specific investment style. All right? There are strengths in your personality. For example, maybe your ability to stay calm when the market's crashing, or your ability to identify the hot stocks of the week or even the month, or your ability. I have a friend that's really good at actually picking market tops for some odd reason, and rides them all the way to the top and knows when things start to turn sour and just exits at the top for some miraculous way. So that's his ability. He's going to leverage that ability and make a lot of money doing it, but it doesn't mean that he's not a value investor. He's not a dividend investor, right? He's not a momentum trader necessarily. He'll do that with anything. So I don't know how he does it, but I'm not him, and I'm not going to try. So your strengths should not, in my opinion, right, be tied to a specific style of investing. Like for me, for example, if you look at the account, right, look at what's going on here. Sorry, not this, but look at the right side, right? I have a ton of options. I've now created some of these leaps into cold credit spreads. I did not have any kind of spreads just a week ago, but I thought that it would be a good idea for me to turn my leaps into spreads and cap off my return. So I stopped bleeding theta. I stopped bleeding premium until the expiration date. So that's a new decision that I've made. And who knows, it could hurt me, but I'm trying to adapt as the market's adapting, okay? Because the market's changing. I want to adapt. I need to be able to be fluid when it comes to my decision. I really value that. So I'm trying my best. Am I making the right decision? I don't know. But I've actually sold calls against almost pretty much all my leaps and almost all of my stocks, all of my equity positions. So I'm trying to collect some premium there to try to offset the amount that I'm burning on my leap positions. Like you can see over here, I have PayPal, JD, Alibaba, etc. So that's a change that I've made right now. But look, I also have equity. You could say that I'm an equity investor. You could say that I'm a monthly dividend investor because I have Main and O, Main Street Capital and Realty Income. You could say that I'm a value investor because I have Smith and Wesson in there and Paramount, which are extremely undervalued when it comes to PE metric. You could say that I'm a growth investor or mega cap. What was the new acronym now? Manaman, Manaman or something. What is it? Microsoft, Alphabet, Netflix, Apple, Meta, Amazon, and I don't know, Nvidia. Who knows? But you could argue that I invest in that circle, right? I'm part of the acronym. You could also argue that I'm internationally diversified. Paramount Global does business internationally. Apple does a lot of its business internationally. I think Smith & Wesson sells some stuff internationally. But you could also say that I'm invested in real estate. Realty Income is commercial real estate REIT, right? So you could also say that I'm in the loaning business because Main Street Capital isn't then in loan. You could say that I'm in the healthcare business or in financials because I'm in Apple and they are involved in both of those, right? So you could say a lot of things about my investment style. You could say that because I bought Goldman, right, and then I sold Goldman when it went up $50, that I'm a swing trader. Okay, you could say that I'm a momentum trader. You see what I mean? Buying these positions when they're low and then quickly selling them when they're a little bit higher. You could say that I'm a buy and hold investor because I've literally owned some Apple since they opened this day account. So that position has been the core of the account. You could say that I am a buy and hold, never sell, right? A Realty Income I've also had, I think, since the beginning. You could say that I'm a precious metals trader because even though I don't have any precious metals in the account right now, any investments related to that, I bet heavily on silver. If you want to go back in the videos and check it out during the crash in 2020 and 2018. And I profited both times from silver. So you could say that I'm a precious metal specialist and I just do generalist stuff in the meantime until the market's crash enough to where silver and gold and whatever and the silver miners crash to an unbelievably low level. And then I just, buy them because I'm an expert in precious metals. And yeah, I used to study that. I know a lot about like the way miners operate. So I can kind of see the situation. So you could argue that I'm specialist in that. I wouldn't call myself specialist. Obviously, there are many, many people that know a lot better than I do. But I know a lot more of the ins and outs of metal mining than the average generalist investor. So do you see what I'm saying? So I'm trying to diversify. I'm trying to expand my grasp of the market and see the more overall, like, higher picture of what's going on. And sometimes I have been forced to shift styles. And people will say, like, that's weak sauce. Like I mentioned, like 3 times now. For example, sometimes I've gotten stuck with a position. I decide to hold it for a longer term. It makes me, from a short-term trader to a long-term investor, right? Which is kind of a meme. But I really think there is a lot of value to that. But I wouldn't even get into a stock. Well, actually, I made some mistakes before. that I have to own up. I got in some stocks that I had little idea what they're all about. Crashed while I was learning, and then I have to exit. But still, I try to not get into a stock and do a quick trade or a swing trade into something that I wouldn't hold for a long period of time. Oh, by the way, you could say that I'm an options trader, because I mean, if you look at the account, it's like it's got a ton of options. These are all options here, so you could say, oh, this guy is an options trader. All right, fine. You know, do you know what I mean? So you can't really pin it down. Like, what are you gonna say? And I look at that as a strength, that I'm able to be flexible and transition from one thing to another. If the options market dries up, I'll put more of it in equity. At one point, actually, before the 2020 crash, I had like $30,000-$40,000 in cash. So you could say that I'm just an extremely conservative investor, and that I'm holding all this cash and hoarding the cash, and so anyway, that's my point about this. Is like, I think there's a lot of value in being flexible. I don't believe in the mantra that you have to pick the style of investor you are, identify with it, and stick with it for the rest of your investing career. I don't buy that whatsoever. I really want to know what your opinion is on this topic, though, because I'm tired of repeating myself. Basically saying the same thing over and over from different standpoints. So let me know what you think about it, about somebody changing their stance on the style of investing they're implementing in their account based on circumstance. Okay, I'm going to leave it right here for right now. I will see you hopefully all tomorrow. I've been making a few less videos, by the way, because I've been busy, but I'll try to make as many as I can. All right, that's it for now. Peace out.